What is profit planning? Well, profit planning is generally planning the actions necessary to achieve a target profit level. Okay, so with that being said, what you're effectively doing is you're creating multiple operational budgets. You're identifying activities and you're attributing the resources necessary and the cost of those resources to the specific units or activity groups, and you're doing them collectively so that you can assemble all this information into a master budget. Because in effect, what you're doing is you're having to allocate resources for the purpose of achieving profits. Now, in doing so, you first identify the activities that are necessary. Then you have to identify the resources necessary to achieve those activities. And then you look at costs that are associated with those various activities. So you have to do a lot of simulation or what if analysis to determine at what is the effect of adding resources to one activity so that you can increase this level of activity versus reducing costs by reducing activity levels. So basically you're conducting what if simulation or sensitivity analyses to see. So you can start with the break-even point, and in that you're basically saying at what point do you reach break even in terms of how much money are you making above variable costs so that they match your fixed costs. Now you can use that same formula to change it just a little bit to identify the desired profit level. In doing so, you know exactly what number of units and things like that you have to sell in order to reach a certain level of income that achieves a profit level given the variable cost level and the fixed cost level. You'll also do an activity analysis to see what is the profitability of every individual activity and what individual activities are necessary or just good to have or could be eliminated or minimized as part of the process. So all of this are specific tasks that you have to undertake as part of the profit planning process.